Hey guys, welcome to another Trade Genius podcast. Got my good friend Bob Kudla here. We are going to talk about the biggest bet ever. Has Michael Saylor lost his mind? And what does that mean for Bitcoin? Let's dive in.
Trade Genius.
Well, Bob, yesterday they came out with this offering, this new notice to board members. I'm talking about MSTR, and it was pretty wild because they're talking about diluting the shares, I think, 10x? It's a considerable amount. So we got to kind of unpack this thing because it's pretty wild what he's been doing and what he plans to continue to do.
Yeah, and before we go, do you want to throw the first slide here, Phil? Congratulations to you and to me. But
Yay!
5 million views. That's amazing. And what's funny about it is that you and I took a 3-year break. We'd probably, if they combined both of them, would have been much higher. So pretty wild, guys. I really appreciate it. We're fighting against the algorithm too. So appreciate everybody who's watching your consistent support. But yeah, Phil, this was mind blown. He brought up I call this the Moab. This is the mother of all Bitcoin bets. Okay. And it's not a 10x, Phil. It is a 33x.
33x.
Potential expansion of the share count dilutive. Now, there's a lot of weird things happening with this. I'll give the quick facts on this, and then I'll give my opinion, and Phil give his opinion. And I think none of you guys are going to be satisfied with what we say because it's not going to help you what your MicroStrategy trade is going to be next week. Okay, this is really what does the next 2 or 3 years look like, and there's going to be a lot of volatility involved in this, and we'll give you our thoughts on maybe how to trade that. But first of all, he declared that he wants to expand the balance sheet, the number of shares available up to 10 billion, which is a 33x increase. He wants to increase the amount of preferred shares available, and he also wants to provide with some awards for directors. But the thing that caught everybody's attention was the dilution of the company shares. I'm going to leave the accreta part to you, Phil, but I'm just going to speak to what he's trying to do here. And I think there's a couple strategies here that he's trying to do. Number one, he did something he wanted to catch the market's total attention on, right? It's a look at me strategy. And number one is he may not get this approved a second time. If he just incrementalism, it's not his style. And number two, it ties into a narrative that he's trying to create for himself. He wants to be that crazy guy, like Trump's the crazy guy president, right? That no country wants to cross because he'll actually follow through on his threats. And I think Michael Saylor wanted to build up over the last year or so that I will do what I say I'm going to do. And if he goes ahead and he creates $2.43 trillion in potential market cap for Bitcoin, an increase by this dilution that he's going to buy Bitcoin with, well, everybody and their brother thinking, I got to get ahead of this clown because he's going to basically create the supply shock that he's been advocating for. So that's what I think his plan is. Now, part of it could be bluff. This is just an authorization. It doesn't mean that they're going to issue 10 billion shares the day after the vote. This is going to be over a period of time. You'll never know when he's going to do it. And what that does, Phil, in my mind, is how can you ever short Bitcoin if you don't know the madman from MicroStrategy is going to come in there and force you to cover your shorts and create an environment where you create Bitcoin to rise. Okay. Now, the downside, in my view, on this is that if Bitcoin consolidates, which it does quite a bit, it doesn't always just go straight up, as we know. It consolidated in 2024. It puts pressure on Michael Saylor because basically he's the world's largest depository of Bitcoin, and he has no way of necessarily monetizing that, unless he's active in the futures market, because Bitcoin doesn't have a yield per se. Okay, don't get it started with this Bitcoin balance sheet yield thing that he does with the bond thing. If I own Bitcoin, he's not drawing cash from that Bitcoin unless he's loaning it or he's in the futures market with it, and that's Mox next to what he owns. So I think the strategy is bold. When I first heard it, I just rolled my eyes because I was already a little negative on MicroStrategy because it wasn't able to perform perform, as Bitcoin was going to all-time highs. And then I sat back and I said to myself, this could be the most clever, bold, audacious game theory that we've ever seen in our life, because everybody and their brother that wants to get in this game now has to get in the game, whether they want to or not. And now that he's part of the NASDAQ, everybody owns Bitcoin, whether they want to or not. So everybody's rowing with this guy. And I think that's what he wants to do. I think he wants to ignite the Yellowstone fire and start a conflagration and basically have the rest of the market help get him where he needs to go without necessarily diluting all these shares, Phil. I'll throw it to you.
Yeah. And so the reason why they're doing this now, I think, is twofold. One is they maxed out their original plan, right? If you look at the original plan, it was to raise $42 billion by 2027. Well, they're going to hit that here shortly. So something that was supposed to take 3 years has taken like a few weeks, basically. They're already at almost 42 billion in holdings in terms of Bitcoin. But, you can only do so much with the amount of float that you have. So they're kind of, if he wants to accumulate more Bitcoin, he has to issue more shares. And so that's why they put out that notice to do that. And again, to me, it's a lot of it has to do with the demand from the bond market, right? When he talks about a BTC yield, all he's doing is he's able to buy more BTC because he's able to command a premium on these conversions, right? Like he'll convert, but you have to pay like a 55% premium over the current share price. Well, that allows you to buy more Bitcoin. So it's a leveraged yield because the bond market is allowing it. And the bond market's allowing it because the bond market doesn't have access to something with the volatility and the compound annual growth rate of Bitcoin. So they're fine with that up to a point, I would imagine. That's going to continue to fuel this for the time being. Now, where it gets interesting is, people have to wrap their head around whether they like this or not. If you've been a long time MSTR stockholder, the idea of them going from 330 million shares to 10.3 billion shares might not sound so great. But while it's share dilutive, it's Bitcoin accretive. So even though like your share dilution or your shares will be diluted, you will own less of the pie because the pie got way bigger now, or is going to get way bigger. What you're really having to wrap your head around is the fact that your shares represent a larger Bitcoin holding, much larger if he pulls this off. So it's a new mechanism in that you have the traditional share dilution, but you are dealing with it being backed by the world's most finite commodity that's traded on the institutional market. So what's more important, the amount of BTC that you're being represented by your investment or the amount of shares? And so we've never had something like this before. This is a whole new animal, and it's forcing people to look at it in a whole different way. So I think at the end of the day, where this is going is that if Bitcoin's going to $1 million or 2 million or 3 million, which I think in this world with fiat having to be printed ad infinitum, it's probably a self-fulfilling prophecy at this point. It's just a matter of how long it takes to get there. Then really what you want to be concerned about is how much BTC that you control or that your investments are representative of. And now he's got the QQQ inclusion, which means we've got forced buying as of Monday, and there's going to be a lot more exposure. So I think what he's doing if you look on Twitter, he said we have to build a bigger rocket. And I think that's why, because he saw the QQQ inclusion. This is what he's doing. He's building a bigger rocket. He needs a bigger container to hoover up all the Bitcoin he possibly can. I'm sure his intent is to basically grab all of the remaining circulating float out there so that we do get forced to that point where we're only looking at miners that are able to produce new supply. It's either that or long-term holders are willing to part with their Bitcoin, right? And that's going to become less of a thing as well once we get these products that are able to, you basically can use your Bitcoin as collateral, right? So loan products and things like that, where you can go into rolling loans, like the real estate developers do. And basically you can live off your Bitcoin, keep rolling the debt because as Bitcoin increases in value, it outpaces the size of your debt roll. So your debt ratio actually decreases over the years. That's what the real estate developers do. And they basically defer, they can live off that while deferring the tax. And when they pass away, the state can deal with it. And then who knows? You never know. Maybe the administration says, guess what? No more capital gains tax on crypto. Then you've really hit the jackpot. But point being is that there's going to be less and less long-term sellers if we start getting products that allow them to collateralize their BTC and start getting loans against it, or we get yielding products, right? and people are able. So there's, instead of trying to like cash out on your BTC and use it in the real world, basically, right? You're going to take that funds and then try to buy it back lower. I think the more products we get like that, the less we're going to see from the long-term hodlers in terms of sell pressure, and that's just going to continue to drive the price up. But all that being said, nobody gets a free lunch, and I think we are in for a pullback on BTC now. I think we're getting our blow off move, Bob. I think the dip obviously has been bought here. Bitcoin just has to prove it's not going to be a lower high. We talked about those levels at the 618 and the 786 on the video the other day. We blow through that, we get a new all-time high. I think that uncorks it for probably into the first week of January. Bitcoin can move very, very quickly, as can the stock market. I think the SPX could probably give us a really fast move up here. But if it's really fast, then that's also a warning sign. So let's say that's the blow off move. We get the recession. Saylor is going to be through some serious mental pain because he's going to be called an idiot. You're a moron. You were up how many $40 billion and you let it go negative, right? He's just going to get lambasted. People are going to sour on Bitcoin because it's going down, not up. Whenever Bitcoin goes down in a bear market, no one wants to touch it. No one wants to touch it. It's going lower, especially if it's up at like $50,000. Like, I don't want to touch that thing at 50,000. It's not going up. Nobody wants it. So you're going to look forward to all these things happening. And that's the tax that Saylor is going to have to pay to be right in the long run. Remember, it's a misnomer that he can get liquidated. He can't get liquidated because he's not leveraging any equity. He's just basically promising more share creation. That's it. Like, he can just print his way out of it, basically, right? Like he's his own central bank. So it really comes down to sentiment. Will MSTR price get hammered in a recession? Absolutely. It's going to get destroyed. Is he going to look like an idiot? Absolutely. He's going to look like a moron. But long term, when sentiment comes back and the green shoots come back and, the bottom is in, that's where the end game comes into play. And by then, he's going to have accumulated much more Bitcoin than where we're at now. And he's going to be in a far better position. And I think the rebound in Bitcoin will be much quicker than years past in that scenario because of the supply side being much less. There's just not going to be a lot of Bitcoin to accumulate back up, and then that's going to create an even faster squeeze higher. So I think long-term, Bob, he's going to win. He's going to win the game. Short-term, though, he's going to have to pay the tax, and that's going to be a lot of mental capital because of just the way the market's going to go for the next 12 to 18 months, I think.
Yeah, and I got 3 points to that, Phil. One is the reason why he's doing this now is that Bitcoin also now is going to get valued on the balance sheet at current rate at the end of each quarter. So that's why he says that Bitcoin accretive. In the past, Bitcoin's on the books as the price he purchased it at. So what he's basically trying to do is he's trying to get from a dollar standard to a Bitcoin standard for the balance sheet. That's number one. Number two is I think he has to keep this Ponzi going because if he doesn't raise more shares, what happens is that as Bitcoin expands, MicroStrategy's premium doesn't expand, and he puts himself in a situation where a wolf can come in and take him out at a far lower price than he wants to get taken out at, because you got players in there that can buy MicroStrategy right now 10 times over. And I think if you don't do that, Microsoft or Google sitting there saying, hey, the premium came down to 1.5, that's cheap, we're buying them, and next thing you know, Michael Saylor, he's out of the game, and the third thing is I think Bitcoin is trying to position itself as a Giffen good, right? The more it goes up, the more people desire it. And because of the nature of its scarcity, right? So I think all those things are at play too. Now in terms of short term, there's a really interesting, and maybe I'll throw this chart out later in the week, is that MicroStrategy to Bitcoin premium got too severe, okay? And so as Bitcoin was going up, MicroStrategy was being shorted by people who are saying, hey, the premium is out of whack and is bringing that premium back down into a closer range. And it looks like, it's basically 0.29% per Bitcoin move, to buy a dollar of MicroStrategy. And it got way up there. So, it still has a premium that got to work itself through. And remember, if Bitcoin does go down, which we anticipate sometime in the first half of 2025, that premium becomes a discount. So MicroStrategy is going to really feel the pain on this as well. But I think I resolved myself to the fact that this is actually Bitcoin positive, not necessarily MicroStrategy positive. And I'll be layering into more BITO and the proxies, and I'll keep my Misty because the volatility is going to be maintain a lot of intensity. And I may, in fact, sometimes short MicroStrategy against Bitcoin holdings that I have in the market, not necessarily hodled, but like BITO or whatever at a certain ratio to be able to manage the downstroke that I think we're going to get, in the market, so I can be in position without harm going into the next liftoff. And Phil, that liftoff happens right as soon as the Fed realizes that, oh shoot, we blew it again, and then that's when it's going to take off. And I think these next 2 weeks are going to be really interesting. I think 2025 is going to be probably one of the more interesting years of our life. Yeah, hey Phil, you want to throw one more chart at us? So I'll hold off on my outtake here. Phil, go ahead.
All right. So real quick, as we go into the long weekend, right? We're talking about Bitcoin and Sailor. So what's going on? Well, we pulled back. This was a main moving average we shared with everybody in the room. We said, can't lose that. If we lose that, we're probably going to go down here into the 80s, right? And now we're bouncing back up. So, critical level, I mean, obviously somebody was trying to sell this and try to get this market to break lower, I think just to try to buy a dip lower, but they couldn't. There was a double bottom here, which held. And that was something we talked about yesterday too, is if they don't clean up that double bottom, everyone's going to be piled in short trying to see if they can get that to break, right? And quickly take a quick profit into that. But this is what happens when that doesn't happen. You get a large squeeze higher. And now you're in that window that rallies, right? So huge levels coming up into play here. The 618 at 102, 172, and the 786 at 104, 906. So these are big levels. Why? Because if you get a lower high, if this is the top, right, and we don't get a blow off move from here, then it's probably going to fail at one of these two levels, right? So over the weekend or over the holiday, we'll have to look and see if we fail here. But if we just melt through these levels and we just get these huge green candles on the daily and we break out to a new all-time high, that's where I think we can look for higher fib targets, basically looking at something between 115 and 130, I think, Bob. But again, we'd have to see a move accelerate, and it'd have to be day after day after day of green candles, which that can happen. But you just want to be realistic about what's going on here. So the first thing we have to do is watch for a lower high. And that's what you guys can look forward to as we progress through the holidays here.
Great. See you later, guys. Catch you on Thursday.
Trade Genius.